So good evening, everyone, and let's begin right away. So let me introduce Suyog Dhawan. Suyog is a seasoned value investor and trader. Considers himself a student of the market, but has 18 rich years of practice and experience. He is the founder of the Conviction Club, a thriving community for passionate and like-minded investors. Suyog is committed to sharing his deep insights and strategies for mastering the art of what he calls techno value investing. Very interesting. He is also the founder of multi-family office wealth management outfit, Strategic Alpha. And through his YouTube channel and blog, he educates and inspires investors. So, Suyog, a very unique name, Conviction Club. Okay, so welcome to you.
Thank you, Kaustubh. Are you able to hear me?
Yes, clearly.
Yeah, yeah.
So, Suyog, as we have mentioned as the the name of the space, this is Beyond Equities. So at least let's start there. One thing on everybody's mind is, of course, precious metals, which is gold and silver. They have been running away like crazy. So when I say that, it is especially for those who have started investing trading in the past few years. They have not seen such a crazy parabolic rally in gold and silver. And now the bigger question on everybody's mind is, are we done or is there any steam left? So I would first like to ask you what has led to this parabolic rally as per your analysis, and then broadly, what do you feel about the rally?
So, what we see is gold has gone up, but it is not gold has gone up. It is the dollar which has gone down. The trust in the dollar which has gone down, which has led to this overall rally in precious metals. So, de-dollarization and dollar debasement, both things are happening at same time, because of which the money has flown into precious metals. And precious metals, what uh, the bull run had started, precious metal bull run had started in 2023. Usually it is a part of overall commodity bull run. And commodity bull runs, if you look at the history of past 100 years, the commodity bull runs usually typically have a cycles of average commodity bull run which has happened is around 8 to 9 years. So if we say that the in fact the commodity bull run had started just after the covid. So we are in a commodity bull run at least till 2028 2029. And typically in a commodity bull run, first gold moves up, then silver joins the party, then later all industrials, and at last agri commodities. So that is the playbook for overall commodity bull run. Uh, and if you say that is the steam left, yes, there is steam left in precious metals. But the broader question is the asset allocation. So just 18 months back, relative to equities, gold was at an inflection point, not only in India, globally. So that was the perfect time to go heavy on gold than equities. But the time has slowly slowly it is coming down, where the future outperformer, because a lot of people in this space today are attending gold and silver or precious metal spaces. I've seen this discussion wherever people a lot of people are flocking to this asset class today. But the thing is, the best what you can get has played out in 18 months. Overall we are in a commodity bull run at least till 28 29. But the thing is, whenever the virgin rally happens, that is very ferocious, that boosts any investor's portfolio. So that has already played out. and but slowly and steadily, the time for equities is coming back. That is what my understanding is relative to gold.
Okay. Thanks for the broader perspective of a commodity rally, which is a multi-year rally, as we all know, and more importantly, a broader timeline for when can we expect it to continue for how much time. Now,
Yeah,
looking at the reasons, as I said, uh, uh, I also welcome Prince to this space. Hi, Prince. Prince, can you hear me?
is on mute.
Prince, you're on mute. You can speak. Okay, so let's just give him a minute. So you more importantly now, let's come to gold. Let's take one topic at a time. In case of gold, there is a recency bias where whatever geopolitics happened after 2022, where the US treasuries of Russia up to $300 billion were frozen overnight by US when they attacked Ukraine. And then, of course, China also and many superpowers started feeling that US treasuries, US dollar as a reserve currency is very risky, especially holding it as the only thing you have for the trade surplus with US. Okay. And then there has been actual data which shows that in the last 2 to 3 years, the central banks of the major economies are buying gold, which is 4x, 5x of the earlier years per year. Other than that, what we also know is that the geopolitics has only worsened if you can talk from a peace perspective and from a West versus East perspective. So, on that count, if things have worsened and the flock to the gold is more than the flock to the dollar, okay, then how do you look at this from a next 3 year perspective?
So even from a next 3 year perspective, this should continue. So what I have said is the pace at which it has moved in past 18 months, don't expect the same pace going ahead, because as I said that that the virgin rally which happens, it usually is in that phase the multiplier effect happens. Now it should continue, because the usually whenever reserve currency status is about to change, if you look at the history of past 200 250 years, whenever, because at some point of time there was British pound, prior to that there was some other currency. Now world has woken up to this, staying away from dollar, when they realize what has happened in 2008. That was the time when the world uh, came to a realization that slowly we have to move away from dollar. And over the years that has been happening, but usually it takes for any reserve currency status to change, it usually takes 20 to 25 years, because just understand all the trades, whatever happens around the world, they all have a habit of trading in dollar. So usually it takes very long time, and that's the reason why. And I'm saying that overall commodity bull run at least till 2028. I'm saying at least till 2028, which means 28 to 30, 31. It can, the commodity bull run can extend to until 2030, 31 also. So from that perspective, it should continue. And as more and more countries are getting aware, now the total holding of treasuries, which most of the countries hold, has gone down compared to gold. Now, today, gold is actually a new reserve asset than US treasuries.
Yeah, thanks. That was clear. Again, reiteration that this precious metals also is likely to continue. I guess the rate of change or the pace of the rally can of course differ from time to time, which is well noted. Prince, can you hear us now and participate? Okay, so moving on to silver, uh, I guess there's a okay. So moving on to silver, uh, I guess there's a basic difference between the two. Gold has okay. I would like to tell the listeners that surprisingly, last year or about 18 months back, I came across a video where Warren Buffett was talking that all this time he has been wrong about gold. So it's famous that Munger and Buffett have been speaking that gold is generally an asset which does not give a dividend, which does not give a yield, unlike bonds. It is not directly linked to currency or trade, so it is more like a reservoir of a precious metal, etc., etc. But he has in fact told the next generation of investors, okay, that you would have a much better outlook towards gold. So that is very surprising coming from one of the icons of investing, and we should all note that. So you're going on to silver. The next,
The want of time, Kaustubh, would appreciate. I mean, I can see your bullishness from last 18 months. You have been speaking about precious metals, and if I remember right, you have ridden this rally pretty well. So, what was the trigger? One you already highlighted about Munger and Warren Buffett, but again, are there any other triggers? And we as retail investors, what are the things we can look for?
yeah. So see, there is one basic logic that has worked over the last 5 6 decades, that there will be few years when equity and precious metals can both perform, but generally it had an inverse ratio. Okay, something that is changing now slowly, but that has always been generally the case. So when we found 18 months back that starting with US, which has had a ferocious rally for I think many years, and then coming to the Indian market also, which was certainly way above the median averages or the valuations. That was the time when you had to look that what is going to work now. And typically, if you look at the behavior of gold price after it goes, slow for many years, okay, it generally comes back, and there were enough reasons why it was happening. So, Yoga, I'm in the process of inviting you as a speaker again. I can. So it became pretty clear that there were more than the regular reasons of price action, which was how things were getting stacked up as far as the central banks of all important economies suddenly doing away with the US treasuries and buying gold, which generally matters because the scale matters more than just domestic consumption. Second trigger was the way there was less acceptance of the dollar, as Suyog mentioned, but silver was something which caught our attention more than gold, I would say, because gold has been that slow and steady wins the race kind of commodity or precious metal. But as far as silver is concerned, silver was looking at its use in so many industries, whether it is all the new industries, whether it is solar, whether it is uh, EVs, everywhere you find that silver is having a big salience, I would say. So silver is some, and then of course, as everybody who invests looks at, the price action mattered, and silver was looking to breach many levels which had not seen since the 80s. So from that angle, we look for silver to be the the more prime candidate to bet on, and the allocation to silver we got for ourselves as well as the advisory, that was more important than gold over the last you can say 18 months. And of course, as expected, the silver rally was more ferocious because coming out of a 4 decadal level, it can be called a generational wealth creator.
Yeah, I'm
Please
back.
give me a sec. I'll just so Suyog, some reasons for silver I was sharing. So you can also add, please, your
Yeah,
guidance on that.
Yeah, so we went bullish on silver this year, March. The reason why silver, so the silver demand and all those things are there already, because we know that the amount of silver which is required in the overall energy transition, be it EV, be it overall renewable and all those areas, the demand for silver was going to increase multifolds. And apart from that, more important data which was coming in front of us was silver was in deficit since 2021. So in 2021, silver was in deficit for 96 million ounces. In 2022, 264 million ounces. In 2023, 184 million ounces. So there was, and in 2024, it was 215 million ounces. So there was a 4 consecutive year of silver deficits, and silver was heavily shorted by institutions. The prices of silver were kept low even after being in deficit, and that become an inflection point for us, because that is where you get margin of safety. So relative to gold, silver was at a 40-year rarity in March, especially on 7th of April when the Trump tariff got announced. The gold to silver ratio was at a 45-year rarity. So as you said, that once in a generation kind of a opportunity, and it was such a opportunity. Why it caught my eye? Usually silver is valued at around 2 to 2.5, around maybe 2.5% of the gold. Gold was trading at $4,000 at 2%. Silver should have traded at $80 at least, and silver was available at $35. So the level of undervaluedness which was there in silver, unlike gold which is just a store of value, it is just going up because of the people believe that it is a store of value, just like Bitcoin. Gold is moving up just because of the belief, but silver had its industrial uses apart from the store of value. So when people start accepting silver as a store of value, the rally can be ferocious. It was very clear. We in fact did a YouTube video on that, and we have seen what has happened in silver.
Right. So I guess again,
So, Soyog,
silver.
just to ask, like, what is the basic premise behind the ratio which you said normally remains around 2 to 2.5?
Basic premise is that, see, usually we have seen in history that during the bull market, precious metal bull market, usually silver outperforms the gold, and because of which the gold to silver ratio, if I divide gold and silver, means silver to gold ratio, if I do that thing, during the bull market the ratio touches around 3%. During the bear market, the ratio touches around 1.5%, which means during the bear market silver is heavily sold and heavily ignored, but during the precious metal bull market, silver takes the limelight compared to gold. So in a precious metal bull market, silver does better than gold. So these swings itself creates an opportunity, and that is what the opportunity was in silver, especially on 7th of April and in March, the whole month. The ratio was towards 1.6, 1.7. So usually, if I plot that ratio on a 40-year basis, we were trading at the lowest. So that ratio tells us about relative undervaluedness or relative priceness. Is it highly priced or low priced compared to gold? Because you can value gold on the basis of how much total gold is there on the planet Earth and all those things. There is a way to, there is a detailed presentation done by Mr. Sahil Kapoor on it, how to value gold and how to derive the value for silver on the basis of gold. Because silver, everything is relative in this world, and silver is always relative to gold. And that is what the premise is about gold to silver ratio or silver to gold ratio, which tells us about when to own more of silver and when not to.
Thanks, Suyuk. I mean, coming to Kaustubh, and then perhaps we'll take expert views from Suyog also. So, coming to the copper, let's talk about copper. So, uh, how you see it can do from here, and what was your understanding on this previously?
So you're asking me?
Yeah, Suyog and Kaustubh both can add up.
So, so overall, when we were looking at commodities, so we track around 70 plus commodities. So overall, what happened is, when we were confirmed that we are in a commodity bull run, we started looking at first at gold, then later at silver. When the silver had its move, we started looking at copper, because as I said that usually in a commodity bull run, the playbook is the first gold moves, then the silver moves, then the copper moves, then other industrial commodities moves, and at last agri commodities. Because in during the every commodity bull run, the reasons for each commodity bull run is completely different. Like 2002 to 2008 commodity bull run was because of emergence of China. Prior to that, there was different reason, and this time it is the de-dollarization which is happening. So each time the reason for commodity bull run was different. And usually when people, so the demand for copper, silver, or all these industrial metals were already there, but unless and until the perception of the people as an investment changes for these commodities, the prices won't move up much. Because just by there is a stable demand, and demand is not going to increase. Even though there is EV and all, that is all long term story. The energy transition and all, that is all long term story. The demand is going to go up gradually. But the thing is, when along with it, even when the investment demand increases, that creates a speculative move in commodities, wherever, especially where they are undervalued compared to gold and silver. All the commodities are priced relative to gold. Whenever we are looking at commodities, one should be looking at relativeness compared to gold and silver. And copper was again at a place where silver was there, because the thing why we looked at copper was because silver was in huge deficit, but copper was also in a situation where it can enter into deficit in future. So silver was already into deficit, but copper were giving us the sign that it can enter into a deficit. And the most important point about copper was, overall we are in a place where huge geopolitical tensions are happening. And if you look at in 2005 times, the total copper supply which used to come from from to all over the world, it used to come majority from high quality mining jurisdictions. Now, what is high quality mining jurisdictions? High quality mining jurisdictions are the countries where there is least chances of any geopolitical uncertainty happening and mining getting stopped. So that was the situation way back in 2005. But fast forward 20 years down the line, in 2025, the supply from low quality mining jurisdictions had increased compared to the supply from high quality mining jurisdictions. And because of which, and when we already know that we are in a space where anything can happen around the world, China Taiwan is happening, Ukraine Russia is happening, Maybe India Pakistan might happen, anything, we are in that world. So this low quality mining jurisdiction can create a supply shock, and that was the thesis why we looked at copper. And along with that, there was one development which happened during that time, just after we looking started looking at it, is the largest copper miner had to shut because of force majeure. So there was supply shock which was coming in copper, along with the demand which is already on a continuous rise because of EV and all those things. And that made us look at copper, and copper was relatively at the same place where silver was in March. So 4 months back we went bullish on copper for the same reason. Hope it helps you answer the question which you wanted.
Yes, yes. So, Suyog, actually, an important question that generally gets asked by the
Yeah, thanks.
investors,
Yeah, Costa.
especially, you can hear me, right, Suyog?
Yeah, I can hear you.
Yeah. So we will come to aluminium, but before that, just wanted to understand, since you have been a practitioner of this for quite some time. Now, in India, if you look at copper, you are mainly in Hind Copper, right? Which is the
Yeah,
minor producer as such, pure. Now,
yeah,
what perplexes most investors in the last 3 4 years is that from say start of 23 to end of 24, it became kind of 4x, right? Then it
yeah,
had almost a 50% correction, when actually we all know that the demand cannot go half, or the supply is not halved or something like that. Nothing really has bad happened during that time, and then we have again got a very parabolic rise only in the last 2 3 months. Okay, so
yeah,
one thing to understand is how to play these rallies, less as a any specific advice, but more of for people to understand that what for example, if I convert this to a question about a stock. Okay, so when a stock, I know it is not comparison of apple to apple, but still in a stock people understand why a particular stock becomes half or doubles or triples. It has a lot to do with the results and the prices and the valuation. So in this case, some guidance just for people to maintain their sanity during such crazy volatility.
yeah. So in commodity stocks, first of all, playing commodities is a challenging thing, and again, more on top of that, commodity stocks is a double challenge. Not most people are able to do it, because I'm doing it for very long period of time. I understand that well. So in commodity stocks, what happens is usually, first of all, we need to understand for no reason in commodity stocks, without much change in the fundamentals, just because of bad sentiments, the stock can fall down up to 65-70%. That is one thing we need to fit in our mind, that it can happen with any commodity stock. And also, commodity stocks shouldn't be bought at the breakouts, because that way it is a sure recipe for disaster. It needs to be bought during the drawdowns. That is when you can make money. Otherwise it will be a painful process, where each time whenever you buy breakout, some or the other time you will get smacked out. So that is how you should be looking at commodity stocks. Now, relative to when you are looking at in the copper, so whenever you are bullish on some theme, like when we were bullish on silver miners, there is a company in India, Hind Zinc. I didn't look at Hind Zinc. Why? Because when you are bullish on some theme and playing it through a single company, it becomes very risky. So we went bullish on silver miners in US, because there is no way in India where you can have a basket of silver miners. In Hinzink is the only silver miner in India. That too, during that time, only 18% of the revenues were coming from silver. So it was not true to label silver miner. 80 around 78% of the revenues were coming from zinc, and it was not true to label silver miner. So we went bullish on silver miner, global silver miner ETF, which was available in US. Even during the copper, when we were bullish on copper, Hind Copper, yeah, we own it, but uh, But the thing is, when you are playing the theme, it is better to play multiple when you have a basket of commodity stocks. So we went and looked at copper miners in US, which is called as copex, compared to India. So in copper we were already owning it, but we looked at copex more. That is what my understanding is. Whenever you are bullish on a theme, you should be looking at basket, not a particular stock, because playing a particular stock is becoming is it will be very risky. And even if you look at the Hind Copper's fundamentals, most of the time management says and never delivers. So just because the stock has gone up, it doesn't mean that it is having great fundamentals. It's a bad mediocre company which is going up just because of the copper prices is going up. Because if the copper prices goes up, most of the top line flows down to bottom line. Without efficient management also, they can generate higher profits. So that is what is happening in the copper, and that is how you should be looking at. So whenever you're looking at the commodity stocks or commodity ETFs, compare that relative to that commodity. So if I'm looking at Hind Copper, so I should be looking at Hind Copper divided by copper. I'll get a ratio of commodity stock versus that commodity. And whenever that ratio falls down to a multiple long term support, that is the time you need to enter that. That is the time you get the best entry. So that is how you should be looking at these stocks.
Okay, great. Some new formulas discovered today, and because I guess this is the common concern. Okay, very less companies to play in India for this directly, and I think that was a very good observation that about Hinzink, that very partial output of what we need. Yeah, now next move to the next one, which is aluminium. But before that, I would like to inform all the listeners that we at Alpha Wealth generally do a monthly webinar on various sectors in the Indian market. And this time, of course, Beyond Equities is the theme where we will be covering precious metals. It is a good 3 hours deep dive. So, anybody who is interested in participating in this rally, and as Suyog mentioned, this is likely to go up to 2028 and beyond. So, most welcome to attend. So with that, now let's move on to aluminium. So you again, we are now getting into wider and wider application metals. So aluminium again, in short, if we understand what is likely to be the rate of change of the rally in 2026.
Yeah. So overall, what we have seen is commodity bull run, which has started from precious metals, then enter into, means first from gold, then entered into money started flowing in silver. Now the same money has started getting rotating into base metals. Compared to, so now when people are chasing precious metals, but the alpha is going to be made in base metals. And what is base metals? Base metals, let me just open. So what is base metals? Base metals are common, relatively inexpensive metals such as copper, aluminum, nickel, zinc, lead, tin, that oxidize or corrode easily. Extensively used in construction, manufacturing, and electrical applications. These are non-ferrous metals and are vital for the global economy. And these are typically abundant, easier to mine, and traded on commodities markets. So, unlike precious metals, gold and silver, these are not rare. And apart from copper, copper is also a base metal. Uh, some during the commodity bull runs, during sometimes copper is also looked as silver or gold from an investment perspective. But beyond copper, and that too, it is in a very rare times, and that is the reason why copper rallies a lot uh, in the overall base metal pack. And other base metals also do well. But coming back to aluminium, Aluminium is the metal of the future. Whoever wants to reduce the weight and don't want to compromise on strength, they have to shift to aluminium, because aluminium has both the advantages. So aluminium is already the metal of the future. It is not rare, it is abundant in compared to precious metals. But usually when the de-dollarization and all these things are happening, usually money flows down to the commodities. So commodities relative to equities, be it S&P 500 or be it India or be it global equities, commodities are undervalued than equities. So money always, whenever there is excess money printing, so why de-dollarization and all these things are happening is because of excess money printing which is happening across the world. Fresh round of, after pause of 2 years, the fresh round of money printing has started across the world. And in India, in fact, even India has done operations recently. So all these things are leading to this commodity bull run, and that is what is entering into aluminum also now. Aluminum demand and all those things are also already there, but the value unlocking for these metals happens only because of speculative demand, and that is what money is flowing down to aluminum. So I think compared to precious metals, base metals is the best place to be going forward, at least for 6 9 months. They shall be outperforming precious metals, because I believe precious metals, after such a long run, maybe silver might do better even from here, but precious metals, the rate of change which it has moved up in past 18 months, I think that should get slowed down. And the leadership should shift from precious metals to base metals. That is what my understanding is. And within the base metals, copper has already started doing well, maybe halfway down the line of what copper can do. uh, but the base metals, other base metals, is looking good to me at this point of time.
Great. And that brings to the last specific metal, okay, that we all would be waiting for, iron and steel. So I guess steel prices have been pretty soft last year, and there has been a build-up in some companies which have applications of steel. But I believe again on companies like SAIL, Tata Steel, you have done a lot of deep dive as well as the sector. So, what is the outlook for steel for the next 2 3 years? Some view, and then, of course, as an investor, where should one focus on?
So if you have seen steel prices during the COVID, steel prices went up from 35, means if I look at HRC or uh, the prices for steel went up 2x in short period of time in 2021, and because of supply shock, because we were in during COVID times. And after that, steel prices have came down to the same place where they were in 2021, at the start of 2021. And what has made this to the companies is most of the producers eh, have the steel prices for them have gone down below the cost of production. And usually whenever the prices goes below cost of production, the prices don't remain there for long, because inefficient producers, they stop producing, the total supply goes down, prices starts moving up. And also speculators keep on moving the prices higher, because during the bear run, even that commodity is also traded, right? Means that is, even that if it is industrial commodity, it is traded by the traders. So when the bearishness happens, trader take much more that price to much more bearish level. But when the bull starts, or when the supply side shock happens, uh, traders once again start building long positions and start moving up, the prices start moving up. And I think that situation is happening in steel already. There are two things in India. There is a safeguard duty which is already implemented by government of India recently, because of which in past 3 weeks steel prices have gone up 13% in past 3 weeks, sorry, 3 months, which has not happened earlier in past 2 years. 13% rise in just 3 months is a big rise compared to where it was. Now the next trigger will be coming for steel prices, that will be from China. China is already cutting down the production. Uh, Also, there is a stimulus which can be get announced. So one thing is, one cut down of production can lower the overall steel dumping which they were doing. And apart from that, if they do a stimulus, because last year September 2024 they did a enormous stimulus, after which the economy got boosted. Even if they do stimulus right now, because most of the governments are printing money now, and there is a chance that China can enter into a stimulus mode again. And if that happens, the consumption boost from China itself can increase, which can support the steel prices. Even in China, for some of the producers, the prices for steel have gone down below cost of production. So at this point of time, the prices are unsustainable. The chances of steel price moving up is much higher than them moving down. That is what the situation is now. Now looking at the steel companies in India. So where is the maximum money going to be made? Because the whole integrated steel plants, if you look at Nifty Metal Index in past 3 months, Nifty Metal Index has done better, and it has done better compared to markets, is because of non-ferrous stocks. The stocks in non-ferrous area. Hind Copper has gone up 50-60%. Hind Zinc has gone up 40%. So because of that, metal index is firm. But in the whole metal index, integrated steel plants were heavy underperformers. In fact, they were down 12% when metal index was up 20%. So at some point of time, mean reversion has to get played out when these situations are there. So in integrated steel plants, I think they are at an inflection point, and multiple triggers can come out going forward. Now look at the companies. So if you want to make money in integrated steel players or whatever, in commodity stocks, you need to look at inefficient players, not the efficient players. Because if you want to have a larger amount of profit percentage in your stocks, you need to look at the companies which are uh, ugly ugly duck turning into a swan. And that is what, in the best thing in the commodities is, now looking at the steel companies in India. So where is the maximum money going to be made? Because the whole integrated steel plants, if you look at Nifty Metal Index in past 3 months, Nifty Metal Index has done better, and it has done better compared to markets, is because of non-ferrous stocks. The stocks in non-ferrous area. Hind Copper has gone up 50-60%. Hind Zinc has gone up 40%. So because of that, metal index is firm. But in the whole metal index, integrated steel plants were heavy underperformers. In fact, they were down 12% when metal index was up 20%. So at some point of time, mean reversion has to get played out when these situations are there. So in integrated steel plants, I think they are at an inflection point, and multiple triggers can come out going forward. Now look at the companies. So if you want to make money in integrated steel players or whatever, in commodity stocks, you need to look at inefficient players, not the efficient players. Because if you want to have a larger amount of profit percentage in your stocks, you need to look at the companies which are uh, ugly ugly duck turning into a swan. And that is what, in the best thing in the commodities is, the companies now, if you looked at Kaustubh, if you look at the data, some government agencies started posting about profitability per employee for PSU banks. Now
Yeah,
the profitability for PSU bank per person, employee productivity. So we all know that the in PSU bank how work happens. But today the employee productivity for PSU banks as a number, it has gone up even beyond the private. How does that happen? It cannot happen. But it is still showing that way. It is because of the cycle, not because of employee productivity. The cycle is in the favor where the PSU banks have lended, and that is why they are generating huge profits, and because of which employee productivity has gone up. That doesn't mean that PSU companies are having better employees compared to private. We all know what is the situation. But same thing happens in commodities. Whenever a commodity which is inefficient producer, when the commodity cycle turns up, a inefficient producer has the maximum profit delta from a loss making company to a profit making company. For example, sale during COVID, it was doing a loss. Before COVID, it was doing a loss of 3,400 or 5,000 crore. And later on, when the commodity prices moved up, the same company, the same ordinary looking company, did a pat of 15,000 crore. So so it's all about the cycles in commodities. So when a least efficient player, and in fact a lot of people, we all know that I have worked in JSW Steel myself for 6 months, and I know that there is no great company in the entire space better than JSW Steel. That is the most efficient player in the entire industry. But not always the best player in the industry, best fundamentals is the best investment. So I went long on sale. The reason why during the COVID was the same, that best efficient player cannot be a great investment idea. And if you look at the returns which are generated for sale versus JSW Steel, sale has given a better return than JSW Steel. Especially if you are if you are a stock picker, where you can find out the reversal signs and then you enter, then it becomes easier for you to have to play this strategy. And sale has given maximum returns than JSW Steel. So JSW Steel profit delta was lesser than sales profit delta, and market rewards the profit delta, change in profits. So hope that helps. So overall, when we were talking on this entire steel prices as well as integrated steel plants.
yeah, 100%. So, thanks for your expert views, Suyok, and over to Prince now.
Thanks, Suyog and Kaustubh. Perhaps we had enough on metals for now, because we'll be discussing more in the session, and the audience can get much more with presentations. And if you are willing, certainly you can visit Alpha Wealth handle. That link has been pinned. So, coming to general market discussion for another 10 15 minutes. So, 2025 has already wrapped up. So just want to take views from both of you. How does has been 2025 briefly, and what are the prospect you guys are looking in the year 2026 as far as markets are concerned overall?
Yes, Suyok, you can go first.
Yeah, you can go first, then I'll take.
Yeah, so our views, like we have been sharing in our spaces regularly. Mid 2024 is where we started getting uncomfortable with the prices, especially in the mid cap, small cap, micro cap space. Also, after such a ferocious rally, we were very sure that now sector rotation has to happen, and it will be painful for certain sectors, and it can the new winners may not emerge very quickly, which played out between say July August 24 to say March 25, and by March 25, some of the new winners of the next sector started to become very evident. So power sector slowly went out of favor, and then we had certain NBFCs, we had cement, we had now metals and all coming back into the field. I think there was a lot of expectation from the chemical sector, but bulk chemicals have not done well. And then, of course, right at the start of the year, since Mr. Trump started issuing sermons after every half an hour, 1 hour, knee-jerk reactions, many chemical companies have exposure to US, so they didn't haven't really taken off, or the cycle has not really changed for chemicals at large. Uh, about 2025, I firmly believe, as a 20 years practitioner in the market, that it is nowhere near a bear market. Many new investors felt that it is a very bad bear market and there was no place to hide. बट अ बेयर मार्केट काफ़ी खराब रहता है. बेयर मार्केट हमने देखा है कि द स्मॉल कैप इंडेक्स कैन फॉल 60-70%. So if you see a small cap index falling at 70%, you can just try and not estimate what can be the overall red in the portfolios. So there was a very meaningful correction according to me that was much needed, and that correction has happened wherever there was froth in the market. For example, if the mid cap trailing P had crossed 40 and the small cap was 38, then obviously they are close to 30 now. And that has also happened very democratically. So some sectors which were frothy have got corrected. Some sectors and some companies which have shown good results in Q1, Q2 of FY26 have actually done well. Now the last 2 months has been a bit unique, frankly, compared to the entire year 25. So in last 2 months, we have seen, unfortunately, three categories of companies, all three not doing much on price action. So the first category is where the company has been giving good results during this overall market correction. They had done well price wise somewhere between April to September, but they are also retracing. Then there are companies which are coming out of the woods, maybe in a sector which was not in favor. Now they also have shown a lot of promise, but the market is not ready to yet price in their good work. And then there is the third part, which actually, here neither here nor there. So every quarter their price would be up 30-40%, and then again retrace entirely throughout the year. That has been happening. Now, in my discussions with Suyog also, I realized that now there is clearly a strong headwind as far as small cap, micro cap, nano caps is concerned. And उसका रीजन एक ही है कि now many investors traders are throwing in the towel after many quarters of practically not having a steady market, and especially the momentum strategy completely failing. People are finding it difficult to sustain who are practitioners of technicals, momentum, and all that. And but I can also say that the value investors are accumulating very slowly. They are not greedy at this point of time. So the last part on this is earnings which were going at 18 to 22% for the Nifty 500 companies for 2 years, which was 22, 23, and 23, 24. They have suddenly nosedived into single digits for the entire FY25. The first year of this year has not been very different, though the earnings have picked up. They are nowhere near, double digits overall. Some sectors, of course, have shown exceptional earnings, and the market to some extent have rewarded them. We discussed cement, telecom, etc. But what I would say is, still in the small cap and the below space, it is time to be cautious, because whatever various policies have been laid out by the government, whether it is RBI liquidity easing or the income tax or the GST cuts, etc., it takes some time, okay, to go through. For example, GST cuts have certainly helped the auto industry very upfront, and so my point is that it's going to be a wait and watch as far as Indian equities are concerned. There is a lot of bias by bigger fund managers towards large caps and all, but I always believe that the upside over there is always capped anyway. So if you are a participant, active participant of the market who wants to very clearly generate an alpha, then all these ये वक्त वक्त की बात है जहाँ पे people try to take a resort to large caps. But I guess this year is going to be good for the uh, tiger who is crouching and accumulating the good stocks well. So over to you, Suyog.
So, um if you have heard us, we went bearish on Indian small cap in September 2024. In fact, we went bearish on Indian equities and global equities in September 2024. W- Went long on gold and precious metals. So that was the time. Precious metals, precious metal miners. So September 2024. So until September 2024, we were close to 80% invested in small caps. As Kaustubh also says that if you are an investor, if you want to make alpha, uh, the money should be where your mouth is, and we were having that in small cap where small caps were favorable. Now small caps turned unfavorable, equities turned unfavorable in September 2024. Chinese equities turned favorable, so we allocated some to China also. So China gold and silver, and that was the strategy then. But later on, it continued to underperform, and the underperformance of Indian equities were well expected during that time, and it underperformed until recently. But now what has happened is the time to we already have booked profits in precious metals partially, and continuing our SIPs in precious metals. So whatever the lump sums were there, we booked out the gains and started allocating to that to Indian equities, because at this point of time, I think Indian equities are better placed compared to precious metals. Maybe silver can do well, but it is not a place where we will put a lot of lump sum and just stay invested. I'm happy to, yeah, as our outlook is that till 2028, 29, we are already in a precious metal bull run. We would like to go there in a staggered way from here now. In September 24, we went into lump sum mode in precious metals. Now, what has happened is equities as an asset class has started turning into favorable mode. But overall our view is, even though equities has started turning into favorable mode, um, the place where the maximum money and alpha should be made is large caps. But as Kaustubh also says that large caps cannot create alpha, but my view is some slightly different. I'm looking at the large caps which has factor value. So I'm not looking at general large caps. I'm looking at the large cap which has factor value, because value has been outperforming the general markets over the past 3 months. So when Nifty has not made a new high, value factor has made a new high. The value stocks within the large cap space has made a new high. For example, if you see a lot of and this is just recent, actually it is not much late also, we are at an inflection point where large cap value stocks can do much better than even Indian small caps. And even in September 2024 we said that a lot of people are now chasing small caps, but the money which small cap can give, the similar return can be generated by precious metals. That is what our view was. Now, when the whole world is chasing precious metals, we are saying that large cap uh, value stocks are the stocks which you value them on a price to book basis, not on a price to earning basis, where you don't look at ROE, ROCs, you look at price to book. If you are looking at ROE, ROCs, which means that you are looking at quality stocks. I'm not looking at quality stocks at this point of time. I'm looking at value stocks. uh, in fact, for that matter, we are now started allocating to value funds like Nifty 500 value 50, Nifty 200 value 30. Value is the dominant theme which can, irrespective of what market does, value theme can do well, and it is happening right now even today. So that is our view. Maybe by the end of January, during the budget time, and maybe if some positive development happens on trade deal front, we might see a breakout on Indian indices. uh, During that time value can outperform, and maybe momentum strategies can also start doing well. But As of now, we don't have any views on momentum strategies. We are bullish on value theme. That is our view. Large cap value is the place to be from Indian equities, and Indian equities have started getting into a phase where they are started getting favorable compared to precious metals.
Thanks, Kaustav. Thanks, Suyog. So I guess we had a very good discussion on commodities and some broad outlook of the market, and perhaps we can have another session sometime down the line to discuss more about it. But yes, we have a webinar on 10th where we would be discussing beyond equities, primarily the commodities, and because these are something which in majority as it was highlighted by Suyog and Costa, when it start moving nobody believed, and as and when there has been consistent rally, so people are getting into FOMO. So it's very important to understand the landscape, and then only you'll be able to find out what works for you and what doesn't. So if you are interested, definitely you can connect with Alpha Wealth for that. Thanks, Kaustav. Thanks, Suyog. So I guess we had a very good discussion on commodities and some broad outlook of the market, and perhaps we can have another session sometime down the line to discuss more about it. But yes, we have a webinar on 10th where we would be discussing beyond equities, primarily the commodities, and because these are something which in majority as it was highlighted by Suyog and Costa, when it start moving nobody believed, and as and when there has been consistent rally, so people are getting into FOMO. So it's very important to understand the landscape, and then only you'll be able to find out what works for you and what doesn't. So if you are interested, definitely you can connect with Alpha Wealth for that.